Right. Hello, everyone. I am back. This morning we entered a couple of trades in London session, and we are back now for the New York Open, which is in 4 minutes. So, okay, vertical line here. So we determined that we're bearish on DXY, and we are to look for sells, as you can tell by this red arrow here. So we enter the sell or buys on Euro USD, of which we got stopped out over here. I see. I based on the power of three, we had price open here, rally down while sweeping this liquidity, reaching the midpoint of the equilibrium of the daily range from the swing high, swing low, and daily time frame. It's now moved up, so that's the manipulation. We thought we broke the high of displacement, creating this fair value gap. We also had price over here, create displacement, breaking this high, and this high. So it's 1, 2, 3 areas, 1, 2, 3 areas of highs, and not this broken by this displacement. Created this fair value gap. Price came back up into it, came to the order block, rose up. I entered. We failed to create this high here, displaced downwards, hit my TP or SL. Came back down to this order block, which is from this fair value gap. If you entered on this fair value gap right here, and your stop loss was below the first contributing candlestick, which is this candlestick right here, then you would have been in the market still. So we just got caught in the accumulation process. So that's the first loss. The only thing I could say maybe is that I need to maybe hold back on compound trades. Compound trades is basically trades you get into when you are not at optimum entry. Optimum entry zones are areas close to a certain time frame or time or a certain area. So in this instance, within the power of three move, you want to be getting involved as close as you can to the end of the manipulation cycle. Obviously, it's a bit difficult to know when that is, but you had the first break of a high over here with this displacement, creating this is the displacement range of where we look for entries. And price came back into it here, and if I had obeyed my rules, my stop loss would be below the candlestick over here, and I would still be in the charts. So in theory, I'll be entering low hanging fruit here, below this candlestick right here, with maybe like a couple of pips, so maybe like 5.5 pips, and my targets will be wherever they are. So I would technically still be in this trade. However, we didn't get into that entry, so we tried to get in here, which is fine, but I think maybe the market's a bit volatile right now, or I just maybe made some mistakes. I need to do more investment into learning how to trade compound trades before I really get good at that. And we had a similar story over at GU, except GU just didn't look like we were ever in the right entry. So I'm not going to go over that, but we also had stop loss being hit here as well. So what we're going to do now is going to wait for the New York session open, and then when that opens at what's actually open now, we can then just draw the opening and let's monitor, wait for the Judas swing again, and then we'll be targeting um, some buys. Open right here. So we will be expecting price to rally downwards. Ideally, I would like for price to take out these equal lows right here. So like a rally from open, sweep this, and then we can target. This gray line is the midpoint of the equilibrium, showcasing that we are indeed below equilibrium. So this is discount, which would fund buys after we sweep this liquidity, for example. So that's GU, which is in high interest. And pretty much a similar story for GU as well. So this is with the midnight open. It's over here. Okay. So over here. Sorry, I do want to get rid of this. It's a bit. Don't want to get rid of any of the. Okay. Maybe we can take out lows down here. We'll just monitor it. It's a medium interest. Let's have a look at AU. AU we were looking at. We didn't enter, but we were looking at it. Okay, so we've taken out this buy side liquidity over here. Let's grab the market open really quickly. Session open, minute open. This buy side liquidity has been taken though. We'll just monitor it. Look at DXY. Let's have a look at our bias. Let's see if we're looking good. So we said we're bearish for today. Reason is being within this range from this high to this low. We have the equilibrium of which we're sitting above it. We've also filled this fair value gap right here. This one, you can see the high of it is with this candlestick, and we have swept it with this wick over here. So we filled this space. We filled that imbalance. We have not, however, filled the imbalance from here to here, which is on the 4-hourly time frame. So there is some plausibility for price to continue tracing back deeper. So if it goes up, it is potentially possible, but we are bearish because of the overview. Above the equilibrium, we filled the first fair value gap. We have liquidity almost relatively equal lows over here. We have an imbalance down here too. That's been filled. And here, we haven't fully filled this as well. So there is some, there's reason for both. We'll keep it a buck, there is. And we've already filled halfway through, so we can go up to fill this, but it's unlikely because it's further away from price. So, but though both are plausible, I am leaning towards bearishness. And we will be very picky with our entries. So that's why we are looking for this to play out before we are interested. So now that we've got those parts of the market analyzed, this was a beautiful trade. We didn't really close at the top blue line right here. But the idea was to get to sell side liquidity, which it literally basically did. Beautiful, beautiful trade. This, all these vertical lines. Okay, can get rid of these as well. All right. So this liquidity is still there because we are yet to sweep it. We just created a third area. So there's going to be a lot of liquidity down here. So let's look at the daily time frame. We are in a premium. Hold high over here. That should be bearish. I just don't like the order of how it's done things. Midnight is here. 30s here. We are bearish on this. I'm gonna get rid of this. It's in the way. Okay, so there is. We fulfilled. Oh, see if we can. Say this is the proper fair value gap, which we pulled right into. Low interest. Okay, with this one, we will price to rally. The alert hit. Look at 80 Swiss franc. I actually think we're bullish here. In this range here. Then we have order block right here. We've kind of swept it a little bit, but we've also broken this structure here and we're in the discount area. Just keep an eye on this. Okay, in the meantime, because we could go through all of these pairs, but whilst we're learning, I don't want to burn ourselves out. So give me a second. That's getting on my nerves. Perfect. Muted it. been a while since we've done a session. once price takes liquidity, what can I do? I'm gonna come back to that because that's stuff I already know. It's more tedious to do, and I don't want to waste time. So I'm going to just take short notes. We're going to speak about how seasonal tendencies affect these markets. I'm going to speak about the fact there's order block, sell-side liquidity, buy-side liquidity, what they play as a role. They just buy-side liquidity or taken out. I'm targeting the sell-side liquidity in line with this order block, the day time frame. So the model can be scaled to any time frame. I will write that all down later, but I can see the market. I can see that graph anytime, and I will know what this means. So I'm going to, for now, write this. I would need some space. Just take a note of once. What can it do? And it will take a little break in 30 minutes, 35 minutes. We should have finished this by then. 35 minutes. We'll then go back to live markets and then see if there's any opportunity, because it'll be 9:30 then, which will be the time after manipulation should end. And then we'll go through some pairs if we don't have any opportunity. We'll try to find at least one move. And then if there's none within the pairs, if there is none that we can see within the pairs we like to trade, then we'll go to other pairs to have a look. Do a new chart because I want to do something. You'll see it. I want 2 screenshots. 2247. So just for context, what we are coming from this. So this is the daily time frame. Okay. Over here so it's a bit clearer. Daily. So start off with this daily structure, which we got from here. And we gave the reasons why we're bearish. We got the title. I've got a lot of things open, so that's why I'm a bit laggy, and I'm streaming on top of that. So it's the mess on the key computer. So there is something to note with the mentorship. We can have a pullback into an old fair value gap or a relative equal lows and highs. We've currently come back into this fair value gap. We could, let's see how it reacts to this, but we could even still come back down below, but this may be enough. But the key thing, whether it's a fair value gap or a relative equal high or low, is that displacement range taking out one of those lows. So even if this is the low, right, instead of it coming down to liquidity, I would still need it to take out these highs over here with displacement. Just a quick side note. But yeah, so this is starting off with why this is bearish. Then we get to see it being bearish, and we zoom in and we want to highlight this because we can see we've hit our target. So the question is, once price takes out liquidity, what can it do, right? That's the purpose of this page, right? Which is basically showing after we hit our target. And then we see this candlestick right here is where we take out this green line of sell side liquidity is like around about here. And although it's not a fair value gap, we can zoom in onto this right here. So 1, 2, 3, no fair value gap, but there's this still important, 3 days. And then we're going to see what that can do for the next day. Remember, this is the daily time frame. Now we zoom in onto the hourly chart. The hourly chart, and we are, I believe that's the low. That liquidity. Either which way, we're going to now see what we see, say what we see. Okay, so with this line here, you can see that that low turned into, it was sell side liquidity. It turned into buy side liquidity, which makes sense, right? Because retail traders trade support once it's broken through, treats it as resistance. So that does check out. So we'll add notes that you guys can know. Legit. This is sell side. And then this buy side. So it was sell side, got turned into buy side. We also see fair value gap here. Price didn't go above this first candlestick. Is there anything else to note? Do you see relative equals down here maybe? I think that's the main thing. He said to take our time though. So there's also this order block which price comes up to. Yeah, this order block here. We have a higher intermediate term high here. Then comes back up. This order block, which is the upper echelons, which lines up with this sell side liquidity line before it displaces to this previous low right here. And then sweeps that liquidity, once it's that target, it pulls back to the order block with the fair value gap here, and it's now starting to come down. In terms of time, a bit unclear, but yeah, I think that's the main things. So remember this. This was an order block. It was currently 830. We've pulled back into not this sell side liquidity, which is what I was looking for because it's relative equal lows, but into this old fair value gap, which is before 830. It's now displaced with great deal of pressure, which lines up with our bias as well, by the way. So we're bullish against the dollar. We've had this big displacement. Okay, 5 minutes. It is. Had this big displacement, and we can now use it to target some highs. I'm gonna get rid of this just because I don't like it in my way. I like a declutter chart. So 830 open, we ride it downward. That's due to swing. We've displaced, breaking these highs with this fair value gap over here. So now our entry is this. We then also have another fair value gap right here. And all of these up. So all of these things serve a different purpose. Just grab this up. We need it. So we'll be looking for retracement into this to the upside as an entry. Well, as long as this is a fair value gap. And the stop loss being around about here. And we can set the alert. Pretty much the similar thing on your EU as well. This is the fair value gap here. Pulled into it. Displaced. This one's really displaced, breaking the previous high. We just need to pull back into at least this area here. This is too much noise. It's really hitting this target. Same thing here. AE looks clean though. I like AE a bit. Okay. So he used time. It was a bit difficult because I don't like using time where I don't have the exact figures. It's 6, 12, 8, so I'd have to guess. I'm not trying to do that. So I didn't use anything with time, but I did mention it at least, so that's a good sign. before we continue, we had planned, or we had said we didn't spot this buy side liquidity here. I see it now, obviously, but I didn't say it. I instead focused on this order block, and then I did mention this, but I described this as buy side liquidity rather than this. This we had established a sell side. As you can see, I drew it out, and so did he. And it took that, came back up to this order block, is what I said, or this order block here, and then obviously this fair value gap as well. So Ah. Imagine we had listened to this before we entered our trades, we would have saved losses because I'm not certain, but I don't think those were in thingies. Yo. Excuse me. Excuse me. Okay, it's currently 8:48, so I no 9:18. So I will be looking to get back into the markets in the next 12 minutes. A couple more setups like these. Ooh. Mm, when it ends. I need to change some of these color schemes. So we don't need tech. Actually, it's this. If prices always to come back down from here. We wouldn't, for example, into this, which I would have in the past. We wait for Well, I did get rid of it. Whoops. It was from the day before because it was so far away. So we just headed to the chart a little bit. Okay, 5 minutes. We are not finishing this in 5 minutes, but we can see what we can do in 5 minutes. We learned some new tech, which is nice. But that can't be his normal speed, right? Yeah, but it's not in the premium range. Yay! See, one here. Ba 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 ba. Above this. No. Mm. No way, wait, the audio. Oh gosh.
'Avoid the things I'm telling you to avoid. That's it. I promise you this. If you give this 3 months of study, serious, sleeves rolled up, diligently going in every single day, back testing and looking at it, and then for at least 2 or 3 more months of forward testing it, 6 months with just what I've taught here, I am confident, I am absolutely confident that you will have found your model. It's simple, it's rule-based, it's visually pleasing to see because you know what you're looking for. It's a specific time pattern with the algorithm. So you're getting in sync with what the algorithm's going to do, just like smart money does. Okay? You want to be like the composite man? This is what the composite man's doing. He's not looking at Microsoft schematics. And I know that might upset some of you, and that's not my intent. But they're looking at liquidity like this. They're looking at how the market's going to allow them to fleece the uninitiated. That's just the way it works, folks. You might not like it. It might feel unfair, so therefore, I don't want to believe this guy. He's talking conspiracies. Call it whatever you want to call it. I call it the market. Until next time, be safe.
So annoying how I didn't have audio. So I was looking at the bar. They have a bar that shows you audio right here. I was like, why isn't it moving again? Because this is moving, so I was distracted. I didn't see this. What? Why is it loading football? Hello? But yeah, anyway. I'm being trolled, right? Yo, my computer is struggling right now. I have so much open, it's ridiculous. Hold on, let me try to close some things.
All right, so we're going to be doing a quick little ditty on institutional order flow. I'm going to be trading against daily bias.
I'll come back to this. That was a chunky video, so I'm going to dissect it a little bit more, plus the markets are live. So let's have a look at the markets for a bit. Okay, I've closed the tabs I'm not using, so my should be better. So we got rid of some of the pairs that would be, the liquidity would probably be a little bit lower during these times. I don't have GBP, JPY, but it's right here. There's also news at 3 p.m. Ooh. I'm not too sure. This is premium. Okay, I think these are the main ones, honestly. They're all in of each other, the same thing. And obviously, they are also in line with the bias of USD. But it's just about the entry. Whichever one has the best entry, we go for. And then as well, so this has a result ratio of 7.1. That's outside liquidity. What is this market? Sorry. One to 8.7. One to 8.7. One to 7.1. This has the best entry, but it is the weakest retool ratio. So the reason why these are all valid is because they all have the same idea. I don't know if my original fair value might be rid of that. Clean this up. What does this mean? GB. Sorry. Delete this. There we go. So this has it. What's key about this fair value gap? Time. It's before 8:30. Price from 830 had a Judas swing into that Fair Value gap, which then caused us to buy. We've broken this liquidity first of all. Then we're going to have it looks like we're having this retracement. We're then having this as our trade entry from this displacement leg that took out this high right here. I think I need to start including that. See if we can find a color for this. I'm going to go deep green. I think I like the deep red. Okay, so I mean, rather than just sitting here watching the charts and stream, I'm gonna watch it off stream, and that's what I'm gonna be watching. I mean, I'm happy with it. Yeah, that's pretty much it. I'm gonna wait for those to come through and trade it. Pretty simply put. Yeah, not for much more. I could go through and do more of episode of this. What's the time? It's only 3 o'clock. Only the 5th, right? So we have 3 days in theory. It's the part where we can fly through them. Oof. Let's go, Brandon. Still not getting that pullback we're looking for. At some point, we do have 3 o'clock news. I think it's PMI. It's just in under 10 minutes. You know what? We'll stay alive for a bit. Take a little break, but still sure. Should we put the charts on a different screen so I can multitask? Yeah, so we're gonna get some movement, obviously, with it. Yeah, actually, wow, I was on mute. What's the point of a timer that's on mute? Not unmuted, on ONMUTE. Right. I've lost bearings. All right, there we go. I can't get it now. Spreads will be high. News is in 1 minute, and we haven't even come to entry on this one. No here, no here. All of them have just avoided the entry. Yes, sir. Segundos. Dos. Uno. Boom. Check spreads. Those are fine. Yo. Okay, it's pretty much neutral. Nothing near entry. Or at entry, I should say. Give it a couple of minutes. and think about that. On the 3 minute, we have this, the belly gap. Doesn't matter though. I see one in the 5 minute. That's what I'm going by. Might be cooked. Yeah, that's annoying, dude. So hot, me too, my headache. I haven't seen a way I could have got in because technically there's one from here to here. Can I go in there? Top. Something like this, maybe. Too late for that though. So. not looking like price is gonna come to our entry. We probably could go in here. This would have been the move. Of the is what it is. Whoa, that's a big drop. Okay, AU technically is valid. We've come back into this area here. Below the area that we want, which the loss is about 5 pips. Red. Used a bit already. This bit. Okay. Let's see, 173. Okay, ease and entry. No. We're into the sale. Hell no. It's not clear what DXY wants to do, but we're gonna have to trust the bias. Might be an afternoon session delivery for New York. Be interesting. We're in bias, we're in the AUD, USD, and Euro USD as our two pairs. We are currently monitoring GU for entry purposes, and we'll see. Let's post this into the. Okay, we have an alert, so watch this for a little bit, and then after a while, we'll probably end stream slash. I'm contemplating doing like a couple episodes because I don't want to end stream and start stream again unless it's in the evening. So I'm contemplating just doing it all today and then potentially doing it tonight. And everything I need to do starts at 5. So between 5 and 6, I'm very busy. So I won't be able to do it unless it's now. But I want a break because I've been working the whole day. So even outside of the stream. Play a quick chess game to relieve some stress. GG's. Another one. Okay, this is delivering now. I wanted to go here. Let's take middle. A dodge. I can't even take that. Oh, GG. Hold on. I sold. Oh. Okay. You'll take. Over here. Nice. Over here. Alright, lock him. Have to go here. Oh no. Yeah, I knew I was lost. I spent way too long at the start. It's on me. Okay, one more. And he would mess up. Oh no, by border. Mm. GG. All right, I said one more. So GU didn't come to entry, but the rest of the entries we have are looking good. Both AU and EU. That's the beauty of having multiple pairs. If I only was trading GU, I would not have had an entry because price didn't come to our entry zone. So we looked at other pairs, we're going to two others, and they are currently in profit. Obviously, it's early days, our targets are quite far away, but that's two great trades. So we just monitor that. What we would do normally is wherever there is liquidity, especially equal highs and lows, we would target them. So I'm going to set alerts instead. Alert there and alert here. Then we can take out the GU alert because we're not interested anymore. Cool. Watch it for a little bit. Then I'm gonna try my best to watch at least one episode of Mentorship. time to mentorship.
Okay, going long here, and it's on the basis of the sell stops or sell side liquidity being taken. We've already traded into a fair value gap around that 4,000 level. And I'm trading with the idea that it could run up here and take out the buy stops above the high of the day. It doesn't need to do.
He's going through a counter trend bias trade. Counter trend bias. I just said that. Counter trend bias trade, right? So he's going against the bias. So I'm going to start this again because this is bold.
Right, so we're going to be doing a quick little ditty on institutional order flow. I'm going to be trading against the daily bias. Okay, going long here, and it's on the basis of the sell stops or sell side liquidity being taken. We've already traded into a fair value gap around that 4,000 level. And I'm trading with the idea that it could run up here and take out the buy stops above the high of the day. It doesn't need to do that to be profitable. So my draw on liquidity is here. And noting the buy side liquidity will take in clear profitable shorts. Right? So this is kind of like the idea, okay, the draw on liquidity. Now, it doesn't need the trade here to be profitable. That's just my best case scenario. So what I want to do now is draw the buy side and sell side liquidity pools. And I'll show you the framework for the logical why I'm entering where I'm entering it. And I want you to take a look at the chart first and see if you understand what I'm capitalizing on. Pause the video.
What do you say?
All right. Pause the video. I'm entering for the logical why I'm entering where I'm entering it. And I want you to take a look at the chart first and see if you understand what I'm capitalizing on.
Okay. So he's saying there's a fair value gap here. And no, sell side liquidity being taken here. So that's sell side. I don't know, but I'm gonna guess fair value gap here, sell side here. Take, I don't know.
Pause the video. All right. This here is the sell side liquidity. So the market has dropped below those relative equal lows. I bought those sell stops. So sell side is taken. Okay, so you can see that here. And now what I'm going to target, even though I think it could go, but it may not really get there. It can go to 40, 51 and take out the high of the day. But let's say I'm wrong. What am I going to aim for? This is where I'm going to take the bulk of my position off at. And I'm going to make this show on top of the line. Okay, and put it on top. All right, so I'm reaching for that. Now, the bulk of my position, I'm going to try a pyramid and build this position a little bit bigger than this, the 4 contracts, but we'll see what I get. Now, try not to worry about that profit and loss. That's a distraction. Pay attention to price. So we dipped inside that fair value gap, just to the left of us. And we went below to take out the relative equal lows that's noted here for the sell side liquidity being taken. So I'm looking for expansion to the upside. Retail sees that as a bear flag. Okay, so they're thinking lower prices. I'm not. Even if I'm wrong about it not going to 40, 51, I'm confident that we're going to go up into the buy side liquidity that's noted in blue. Okay, so far price looks nice. It's respecting the underlying narrative I'm acting upon. Now I want you to also monitor how I manage my stop loss. Even though I'm trading against the daily bias, the fact that we traded down 3 times intraday and took out yesterday's low, by doing so, that lack of follow through kind of like bolsters. I'm going to do 2 more here, trading onto the order block. Okay, so now that's 6 contracts long, and I'll move my stop loss a little bit underneath that low right there. It should not trade back down into that. If it does, I'm wrong, and that's fine. Why do I feel confident about placing my stop loss there? Because if you look where I have my stop, it's basically inside of the lower end of that fair value gap and the old short-term high around 930. So I have market structure supporting the idea, and we've already taken sell side liquidity out. We're back inside the range between where my stop loss order is and the short-term high I have noted for buy side liquidity. So buy side liquidity is the next draw on liquidity. I'll take forward contracts off. So I'm going to see what we're doing here. We're just bumping the order block there. Straighten this line out here. Okay, hold down shift when you're dragging your trend lines in between you. It'll automatically straighten it out. And that is an order block. Bullish order block is what I'm annotating here. So you can see this is all being done as it happens. I can chew bubblegum and walk at the same time. All right, and that's what I'm looking for. I'm looking for that type of movement. So we understand what I'm internalizing. Am I seeing what's likely to pan out? That's what I want. So now I'm going to study to see if price does in fact deliver with that premise in mind. Again, if I'm lucky, it could expand up into that 40.51 in a quarter, but I don't need it to because the bulk of the position, which is now 6 contracts, I'm going to take 4 off above that buy side liquidity, should I get the opportunity to do so. And I'll do it on the basis of a market order. All right, so far we're getting some response off that order block level I've annotated. OCD is flaring. I like things the way I like them, folks. All right, nice little caffeine bar there. Caffeine bar is something I named big green candles. If I'm bullish, I want to see that. If I'm bearish and I see it, I don't like it. Okay, so I'm just being a little facetious here. You don't see that type of stuff called before it happens that precise. But it's okay. I'm going to give you some more evidence here today. Now, this is what you want to do also if you're practicing reading order flow, tape reading. You don't have to necessarily put a demo account position on. I'm doing it just simply because a lot of people like to see it. Okay, this is me just making sure you understand I see this before it happens. Not speaking in waffleese where it's hard to tell what I'm saying, what I'm expecting. It's very, very specific. Nothing ambiguous is being hinted at in here. Okay, so sell side has been taken. This is now being dimmed, so that way the focus is on the levels that are more pronounced in color. Now see there's 2 down close candles. The higher candle of the 2, I'll draw an order block on. It can drop down to that, pick up momentum from there, and then the algorithm will likely reprice higher to the buy side liquidity or run at 40.36 level. So I'm allowing for it and preparing myself should it trade down into that level. It might just touch the higher wick of the 2 down close candle I'm anchoring to, but I'm using the uppermost opening price as kind of the level I'm looking for. But the small little wick high, it might just touch that and be enough, or it may not even touch it at all. But when you're watching order flow, you make this a little bit more thicker so you can see it. It would track what price is doing. Now, this is one of those instances where you're looking for price to kind of drive higher. You want to do it in like big candles, speed, delivery right to where you're looking for. Traders are now trying to go short because they looked at that imbalance at 8:30, the quick sudden drop. The market has come back and rebalanced that. Now it's starting to drift lower. People that follow imbalances and things like that because it's gotten real popular lately. That idea they're trying to sell short on. I'm going against that and I'm targeting them. Okay, so that's a buy right there. So order block right there. All right, I would adjust that line, but I already outlined what I'm saying here. It's basically touched the little wick. So if I wanted to add one more, which I guess I could buy one here just to prove the point, but it is what it is. Let's assume that this is all we're going to build on. I want to see it rally higher from here. Notice I'm not in a hurry to rush my stop loss up. Very, very nice price delivery there. So think about what's being shown here. The down close candles are supporting price. We're seeing expansion. And where's the bullseye? Can we turn 50? My eyes are not what they used to be, folks. I'm sure if it was a wrap, I think I'd be bit by now. There it is. I should have checked my most recent ones at the top. All right, so we'll put that right here. That's our bullseye, okay? And I can bring my stop loss up to break even. I'm actually going to get that a little higher. Now we can see the profit and loss reduced, guys. I'd like to see those numbers flashing. All right, so I'm going to take 4 off when it runs above that high, and then I'll consider moving my stop up and see if I can get lucky the rest of the day. I have things I have to take care of, administrative things and video production. So should we get this run up above, I'm going to close 4 at market. Okay, just sitting here waiting for it to deliver. And again, those order blocks are drawn in real time. You saw it happen. I've outlined it, gave you the logic, and we'll see if we can get some magic. There we go. So I'm going to show you the executions here, and we can see the business. Okay, and I'll leave it up to the market to decide whether or not it wants to go over and take a 40.51 on the quarter level. It doesn't need to at this point. I've booked over $5 hypothetical $1,000 in this example here, reading order flow, and that will be it for this one, I believe. And I'll just change this color here because now it's been.
So I just laugh because I'm just thinking. In about 12 minutes, a man just made $9.2K. If we close at this, 7.8. Now, there's something I learned. My pastor taught me. Pastor Vivian, Dr. Vivian, and she said this. She gave an analogy, and it was a man who went to fix a pipe. There was a pipe that was broken. I believe it was a quite a big entity of a company that had a very important pipe. It's something to do with engineering. And he came with no tools, just a pen. And these guys obviously called him out to come and fix the pipe. And he came walking up and down, looking at the pipes. And they were watching him thinking, what's this guy doing? They were not paying him to fix the pipe. He has no tools. He's just walking up and down and he has a pen in his hand. So he walks about up and down for maybe 5 to 10 minutes. After a while, he then grabs his pen and draws an X on the pipe. And he charged a huge sum of money. And there were other people that paid the price or paid for the service were a bit taken aback because they're like, first of all, that small thing you did, you just literally got your pen, marked the pipe, and you're walking out for your day, walking about, going home, and that's what you did. And the guy's response was this, or at least this moral of the story is this, that you only see the 5-10 minutes, but you don't see the hours of study, the years of experience. You don't see the 5 to 10 minutes of me contemplating that came from me doing this before on when I was younger. In my older days, I was maybe taking an hour to fix a pipe, or I would take 2 days to fix a pipe, and I would learn from those experiences. Or the times where I'm taking on the responsibility that if I make a mistake, the catastrophe is insurmountable. You will pay 10 times over if I make a mistake. And so when you factor in all these different things that this guy is doing and taking responsibility for and has been through, his pay for the job being done is worth it. And I say it to say this, that a lot of times we can see people make money in a short amount of time, or we can see people do something we think is easy, think is simple, and they make a lot for it. And we're just like, what? You're lucky, this, that, the third. But what we don't see, we see those things that, okay, it looks easy, right? But we don't see the work they put in to get where they are. And that's partially kind of the explanation as to why I do what I do, why I'm streaming every day, why I'm showing you guys the me learning process. Normally, I'll do this behind the scenes. I wouldn't show you this study session, but I want to one day, first of all, look back and see, okay, I can locate where my success came from, number one. Number two, is there's a blueprint, a footprint for somebody else to follow that, look, this is what consistency gets you. And I've defined consistency as, if you look at my channel, the video's ending, by the way, so I'm just going to talk as my break for a little while. You look at my live streams. Like, for the most part, they're pretty much consistently a day after each other and whatnot. But some streams, let me see. So you can see here, yesterday we streamed, or earlier today we streamed for 49 minutes. Wait, 6 hours ago. Yeah, earlier in the morning we streamed in the London session. We streamed yesterday for 1 hour 30. We streamed the day before for 2 hours and a half, 2, 1. But here, we didn't do much. We were basically, I actually was only meant to stream for 2 minutes here. If that many people didn't turn up, I would have ended streaming in 2 minutes. So I tried to say, okay, since there's so many people here, let me try to give you guys something that's worthwhile. Essentially, with this video, it's just me apologizing for not turning up. 80 minutes. But then look what happened the day before. 1 hour, 2.5 hours, 2 hours, 1 hour, 2 minutes. 2 minutes, 2 minutes, 2 minutes, 15 minutes, 5 minutes. And I kept them up. I'm just showing you guys that sometimes consistency isn't turning up and doing a 5, 6, 7, 8, 9, 10 hour stream all the time. Some days you're going to not feel like streaming. Some days you're not going to feel like turning up. And that's shown. But then there's going to be weeks like this where 1 hour, 2, 1. This is now a 2.5 hour stream, potentially 3, because I'm going to stream for a little bit longer. So my point is that a lot of times when I'm now going to start making videos in the future, maybe they're 10-minute videos and they get 1 million views, or it is a 5-minute video and it gets 10 million views. People are like, what, this 5-minute video, how's it getting millions of views? Because they don't see this. How many people, I mean, look at the numbers, right? 1 view, 4, 14, 3, 6, 5, 4, 3. Like, the numbers hit. Nobody's hit. In fact, there's even some streams that nobody turned up to and no one's ever seen. So there's days where I've streamed when nobody has seen me even do anything. And what does that mean? That means that the people in the future that are going to be talking down on me ahead of time, they're not going to see this. I might be talking to no one, but my thing is this: I'm not doing this for the numbers yet. I'm doing it for me. Numbers, it'll be reflective of when I want to do it for other people. Right now, I'm doing this for me. Documenting these consistent days, and this 1,000 day challenge is just there as a number to show that I can do it to myself. It's more of a self kind of satisfaction or self-satisfying goal. I'm not sure the correct terminology for that. So it's your boy C. Yeah, I don't know. So who's playing up anyway. So yeah, I mean, I'm proud. Today we've done basically 3 hours today, and we potentially might do 4 if we stay here for a bit longer. I mean, yeah, that's pretty much it. I mean, I don't think I'll stream tonight though, because I'm streaming quite a bit, and Arsenal are playing today. Okay, looking at these, this is the trades we're in. We're yet to break this high, and we have yet to really expand properly. Obviously, this is over the course from about 10 o'clock. It is almost an hour since we first entered this trade. We are yet to break this high yet, but we just hold. Nothing much to it. We just keep holding it. I feel like tomorrow will be a good day for delivery. I think DXY right now is currently just chilling in this area right here at equilibrium. We've wicked off it twice. Come up to this order block. We've expanded a little bit downwards, but you can see we've had this big move here. So this is all correction, but we are in premium, taking out some liquidity. I think we will still continue down, and you know, the delivery may happen. Like this one happened from midnight to 10 a.m. and then again from 10 to 4 p.m. on New York time. So London session and then New York Open. London delivered most of DXY. US Open, not so much. But yeah, I mean, like there's some days you can see here, there's not much movement because we've had this. But we're going to stick with our initial bias of us being bearish. Obviously, this is the aim. We may not get here today. It may take a while. It may take a couple of days. But we are in. We've had the open, the manipulation. We're just wanting the distribution to last or move a little bit longer. But you can also see from we can get movement from this kind of time. Like this is from 11. The OC open at 11 o'clock. I think close around 3. So from 11 a.m. to 3, which is the equivalent of 4 p.m. to 8 p.m. UK time. So I can hold it for the rest of the day. When I come back home, I might close it. That's just one of the things that can happen, you know? So yeah, I'm holding this trade. Done my little thingy. I'm not going to make any notes on this yet because that's something I don't want to really learn right now. So trading against I think what he meant by counter trade bias is the bias for retail traders. And he did say it was institutional order flow. Essentially just watching what the institutions are doing. And there's also another keyword is that it helps with tape reading. Pretty much did. Yeah. Let's finish off the episode.
And my typical sarcastic ribbing. Gotta be me. So here is the final. Here's the buying for 4,006 and a half, and then buying this here. So the initial was buying the fair value gap, sell stops, then order block, then selling 4 above here, and I moved the stop.
So he's buying that retracement into the fair value gap, which is the equivalent of buying like this. And then he was targeting these highs, actually, low-hanging fruit. I personally think there's more potential in this. Let me just get a simulation. So that's stop loss. That's still a 1 to 2, you know. So there is no harm in me even closing some of this. He thinks it's going to go further. But I could generally close this trade, and in theory, it's not bad, you know. But I do think price is going to go much further. So I'm not really frightened about it. I'll keep my eye on it for now. But I have high hopes for this to continue moving up.
Stop loss up, and it tripped me out right there in the final two. So I hope you found this insightful. Until next time, be safe.
Let's see. Okay, so we'll come back to that another time. What I'm going to do with this document is I'm going to organize it later. So obviously it's organized by episodes, which seems organized, but there's a lot of different topics that are mixed and matched throughout different episodes. So there's going to be days where, or a day where, or multiple days where I then take a topic and create another slides, which then filters by topic rather than episode. So daily bias, and there'll be a whole kind of research done on daily bias. So what I'll do is I'll take all the notes from here, and then I will search for it. For example, let's say I want to learn about how to use daily bias, Control F, RC bias. There's 20 different prompts. I'll go through each one of them. And every episode that mentions it, I'll go to that episode, rewatch the video, only looking for bias. So when it talks about bias, my ears prick up and I start listening and then take more deeper notes on bias whilst also collating information and then organize it in a way where it's more progressive in understanding rather than progressive in episode. Because sometimes you can revisit something as simple and then talk about it in a simple manner. Whereas I may want to organize this document through topic, and then within that topic, I want to organize the topic within progression of understanding. So that's one of my plans. And then what will then happen is I'll have that document for whilst I'm actively in the market. So if I lose a trade and I want to review it in my journal, I will then go to that document to then filter what I think is the reason as to why I lost the trade. And then I would hold accountable or be accountable to that information. And then until I memorize it to like it's the back of my hand, then I can then transition into learning a new model, maybe the 2024, 2022. So I'm going to be on this for a while, this 2022 one for a while. But there's no fretting, there's no problem in that. Just double check, because I think these are going to break the highs. AD's done it, EU's looking to do it, GU's pretty much doing it. I'm looking at MetaTrader. Okay, that's about double average, and that's about 1 to 1 somehow. Do these. Cool. All right, back to the video. Next episode, 27. Wait.
All right, folks, welcome back. This is our 27th episode of the continuing series of the free 2022 ICT Mentorship on YouTube. All right, so NASDAQ daily chart for June 2022. And
This, oh my gosh, dude. Closed. What's the time? 4 o'clock. Finally. It still isn't. $105. Jeez.
Hi folks, how you doing? Hope everybody's doing well. And this is just a kind of like a prep to get your mindset correct on what's coming in. Hi folks, how you doing? Hope everybody's doing well. And this is just a kind of like a prep to get your mindset correct on what's coming in 2 days on the YouTube channel. I want you to understand going forward that obviously you are All right, folks, welcome back. This is our 27th episode of the continuing series of the free 2020.
Interesting. So that will be the next one. Oh my goodness! Wait, hold on. I know it's got.
Well, good morning, folks. Happy New Year.
What's like the time frame? Like 3 hours. Oh, this run is insane. February 8th, 9th, 10th, 12th. 1 hour, 2 hours, 1 hour, 1 hour and a half, 1 hour and a half, 1 hour and a half, 2 hours, 1 hour, 1 hour, 1 hour, 2.5 hours, 1 hour, 1 hour and a half, 1 hour, 1 hour and a half. Oh my goodness. 2 hours, 3 hours, 3 hours. Oh my. Oh, this is insane. What? Yeah, we're going to be students for the whole year. We are going to be studying for the whole year. There's 100 episodes. Average is like hour and a half. 100 hours. Yo. I think this is now moving now. Could take some partials over here. There's not really anything nearby. These are the two main ones. We could potentially hold a U to this. It lines up with the U a bit. Wow. It's just interesting the progress we're making day by day. It's crazy to see because it's like, genuinely speaking, 1 week ago, I'm not doing this. A couple of days ago, I don't think I'm able to do this, you know? Just that even today's episode where we have the range of, the displacing candle that broke structure, we can find fair value gaps or areas of entry within that discount in that range. We've gotten so much better at predicting the direction of the next candlestick of price, tape reading, and we've completely nullified now. When I first started the mentorship, which was last year, I didn't start it properly. I was kind of researching who to study, and I came across like the introduction, episode 1 and 2 kind of a thing. And when I was going through it, I was thinking within retail, so it was tough to let go. The good thing was that I'd come to the place of, you know what, my model is not working. This is the retail model. This model is not working. My psychology is not the problem anymore. So because it's not that, it's my strategy. there's someone out there that knows what they're doing. So I spend a lot of resources and time and prayer and yeah, a lot of prayer, time, diligence in studying who to study. But it felt like as if the first 10 years of my trading experience was to learn what not to do. And on top of that, another layer would be after I've learned what not to do, is to then use that experience to know who is chatting rubbish and who's not. Because if you're saying something and I agree with it, you're wrong. Because I'm looking for something that's talking about something different. Just because you're talking about something different doesn't mean you're technically talking right or saying the right thing, but I can at least then determine whether you're worthy of studying. That's why the two people I had in mind was ICT in TJR, and there was another couple of people, I forgot their names, but they had some good reputation. Nevertheless, I'm glad I found ICT because I really understand his model and it really resonates with me. That's the word. Anyway, episode 27.
22, ICT Mentorship on YouTube. All right, so NASDAQ daily chart for June 2022. And here we have Friday's trading here, okay? Friday, Thursday, Wednesday, Tuesday, Monday. So we had a nice little decline down in this week, and then Friday we had somewhat of a retracement. If you've been following my community posts on the YouTube channel, I mentioned this morning that the 12,553 level is too clean. And you can kind of see it in here. Like, look at the high on this candle. It's 12,547, and then here this high is 12,553. So I'm using this as the higher one, but these relative equal highs, that's what I'm looking at. So I'm thinking that it could draw there. Now, I was giving it the opportunity to do so today based on what I showed in the short little vignettes I posted on my video section. I was out and about today, so obviously I was sharing what I could on my phone. I don't generally trade on the phone. I can manage a position, but I'm not generally trying to enter trades and such. But I made a mistake today, and I was trying to exit, as I'll talk about in a moment when we get into lower time frames. But I was showing segments of me recording where the market was, what it was doing when I was entering the whole business, and you'll actually see the execution errors and all that business here tonight. But the relative equal highs, that was the draw on liquidity. Now, the draw on liquidity does not need to be traded to have a profitable framework or setup. Okay, so what do I mean by that? Well, if we're below this objective, and I'm thinking, and if you thinking the same thing, if you think that the market's going to drop to that level, whether it be today or into next week, you look for a setup that will allow you some kind of participation in this expansion towards that. It doesn't need to get there, as you'll soon see. We're going to drop down into the hourly chart. All right, so here's the hourly chart. You can see relative equal highs up in here. Look at the high of that candle there. That's the 12,553 and a quarter level. Okay, so that's what I'm framing it on. And we traded down, started to run higher. We had a shift in market structure here.
You're very relevant.
Notice how we have had this low, swept. We came down below it, came back above these relative equal lows, and we came back down. Tried one more time to go lower and then rejected that. Notice that? So as the market's starting to trade higher, where is it likely to go? Well, we've already taken out a large pool of liquidity below these relative equal lows. This is sell side, okay? Now we're back above these relative equal lows. So where's buy side? Clear and obviously right here, okay? Not really obvious in terms of any imbalance in here because we already rebalanced this area there. So there's nothing really all that exciting except for that small little section there. So it's going to go up to this area here. My thought process is it's likely to punch through and take the buy stops resting above here. So that's the draw on liquidity. Just think of it like a big magnet drawing price up towards it, okay? So we're going to drop down into a 15-minute time frame. All right, so here's the 15-minute time frame, and here's Friday the 13th. You scared? I'm scared. So we have the market's right here, lower, low, low. So this right here may trip you up. But this right here was a 9:30 in the morning manipulation. It takes out this overnight London low, creates the manipulation idea, then rallies. I was not available during this time, so I didn't take any trades. As you'll see, there's no trades in this area. And then the retracement here in the afternoon, that's what I was looking for. So I want to see that type of idea. So I'm going to add the annotations to the chart now. All right, so here's the 5-minute chart. Here's the overnight London lows. 9:30, we run through it, taking out the sell side here, and it starts to rally. All this rallying up here, I was not able to participate in. The market trades lower, down into the range between this low and this high. What is it trading to? Discount. So I'm going to go into this area a little bit tighter. Okay, so you can see here's a consolidation. It drops down, creates the low of the day, power 3. So it's accumulating long positions, manipulating early longs out of the market, taking out the stops overnight, then rallying.
Looking over what we've had so far. So the actually wait. 550.
Yeah. So I'm thinking. Okay. Friday. And here we have, this is our 27th episode of the continuing series of the free 2022 ICT Mentorship on YouTube. All right, so NASDAQ daily chart for June 2022. And here we have Friday's trading. Okay. Friday, Thursday, Wednesday, Tuesday, Monday. So we had a nice little decline down in this week, and then Friday we had somewhat of a retracement. If you've been following my community posts on the YouTube channel, I mentioned this morning that the 12,553 level is too clean. And you can kind of see it in here. Like, look at the high on this candle. It's 12,547, and then here this high is 12,553. So I'm using this as the higher one, but these relative equal highs, that's what I'm looking at. So I'm thinking that it could draw there. Now, I was giving it the opportunity to do so today based on what I showed in the short little vignettes I posted on my video section. I was out and about today, so obviously I was sharing what I could on my phone. I don't generally trade on the phone. I can manage a position, but I'm not generally trying to enter trades and such. But I made a mistake today, and I was trying to exit, as I'll talk about in a moment when we get into lower time frames. But I was showing segments of me recording where the market was, what it was doing when I was entering the whole business, and you'll actually see the execution errors and all that business here tonight. But the relative equal highs, that was the draw on liquidity. Now, the draw on liquidity does not need to be traded, manipulating early longs out of the market, taking out the stops overnight, then rallying, and then I'm looking for the continuation up to take out the relative equal highs here, because I think I'm still going to see continuation in the afternoon. So I want to buy this discount market, and I'm going to be buying inside of this fair value gap because it's at or below equilibrium between this low and the high. All right, so I've added the annotations here, just because my obsessive compulsive disorder is flaring. It's like a spider sense, folks. Can't help it. All right, so we have the New York session open at 9:30 in the morning, New York local time. Creates the low of the day, rallies, creates the high here. At what time? What time is this candle here? It's 12:10. That's that lunchtime. I told you it creates usually a retracement of some sort or consolidation. Then it retraces lower. And then here is 1:30, right about there. So at 1:30, the algorithm will start seeking liquidity. If it's going to continue higher, what's it likely to do? Seek sell side. So we're sell side. Well, we have relatively equal lows here, but is that a discount? It's 12:10. That's that lunchtime. I told you it creates usually a retracement of some sort or consolidation. Then it retraces lower. And then here is 1:30, right about there. So at 1:30, the algorithm will start seeking liquidity. If it's going to continue higher, what's it likely to do? Seek sell side. So we're sell side. Well, we have relatively equal lows here, but is that a discount from here to here? No. So this dashed line here, it's in purple. I have that noted as equilibrium. That's essentially the same thing as if taking the fib. It's 12:10. That's that lunchtime. I told you it creates usually a retracement of some sort or consolidation. Then it retraces lower. And then here is 1:30.
I need to go back and see what he says about the hour and the 15 minutes.
Clear and obviously right here. Okay, not really obvious in terms of any imbalance in here because we already rebalanced this area there. So there's nothing really all that exciting except for that small little section there. So if it's going to go up to this area here, my thought process is that it's likely to probably just punch through and take the buy stops resting above here. So that's the draw on liquidity. Just think of it like a big magnet drawing price up towards it. Okay, so we're going to drop down into a 15-minute time frame. All right, so here's the 15-minute time frame, and here's Friday the 13th. scared? I ain't scared. So we have the market trade here, lower, low, low. So this right here may trip you up. But this right here was a 9:30 in the morning manipulation where it takes up this overnight London low, creates the manipulation idea, then rallies. I was not available during this time, so I didn't take any trades. As you'll see, there's no trades in this area. And then the retracement here in the afternoon, that's what I was looking for. So I wanted to see that type of idea. So I'm going to add the annotations to the chart now. All right, so here's the 5-minute chart. Here's the overnight London lows. 9:30, we run through it, taking out the sell side here, and then it starts to rally. All this rallying up here, I was not able to participate in. The market trades lower, down into the range between this low and this high. What is it trading to? Discount. So I'm going to go into this area a little bit tighter. Okay, so we can see here's our consolidation. It drops down, creates the low of the day, power 3. So it's accumulating long positions, manipulating early longs out of the market, taking out the stops overnight, then rallying. And then I'm looking for the continuation up to take out the relative equal highs here, because I think I'm still going to see continuation in the afternoon. So I want to buy this discount market, and I'm going to be buying inside of this fair value gap because it's at or below equilibrium between this low and the high. All right, so I've added the annotations here. Just this because my obsessive compulsive disorder is flaring. It's like a spider sense, folks. Can't help it. All right, so we have the New York session open at 9:30 in the morning, New York local time. Creates the low of the day, rallies, creates the high. Here, at what time? What time is this candle here? It's 12:10. That's that lunchtime. Remember I told you it creates usually a retracement of some sort or consolidation. Then it retraces lower. And then here it is 1:30, right about there. So at 1:30, the algorithm will start seeking liquidity. If it's going to continue higher, what's it likely to do? Seek sell side. So where's sell side? Well, we have relative equal lows here, but is that a discount from here to here? No. So this dashed line here that's in purple, I have that noted as equilibrium. That's essentially the same thing as if taking the fib from here to here, and that's 50%. Okay, so now we have equilibrium there. The market drops down into equilibrium and then below it into the fair value gap here. This candle's high, this candle's low. That's your imbalance. Fair value gap is here. So the market drops down into it here at 2 o'clock in the afternoon, 2:05, 2:15, 2:20, 2:25, and then displacement. Okay, we'll see this fair value gap on the lower time frames. I'm going to go through and let you see it, but this displacement on the outside is a shift in market structure. In a day that's likely to be bullish, is counter trend to a higher time frame. We're working with the logic that it's probably going to be a retracement because we've been down for a long time now, and most people are probably going to want to get out over the weekend. So the algorithm's going to start squeezing on them to get their positions square before the close of the Friday. So in this area here, we're going to drop down into a 4-minute chart. Okay, no fair value gap shown here except for this small little area there. Now by itself, that's possible. We get a small little return into it there. I'm not looking at that. Okay, go down into a 3-minute chart. Okay, there's a gap there. Again, you can see that candle right there. That would be fine if that's what you're looking for. And then a 2-minute chart. There is. Gotta set my chart back. It's gotta be the way I want it, folks. All right, so we have down close candle in here, order block, fair value gap. This candle's low, this candle's high. There's our imbalance, order block. It trades down, drops into that, and I'm going to show you the executions here. So as it's dropping down in here, you can see I have hover on top of this thing. I bought 36 contracts, and the assumption is we're using a discount broker, something like AMP Futures. I'm not repping AMP Futures, by the way, but they have really, really low margins, so that would be allowed for something with the equity that was used in this example today. These are paper trades, so you guys know for compliance reasons and full disclosure. I'm illustrating execution and theory. Okay, I'm also showing you what I was doing when I was on Twitter. When I did use MT4, which I don't do anymore, I haven't used MT4 in years. Okay, I don't need to have a fake MT4 server to be able to do this. Okay, this is what I was doing, and I was trading it and building it up and building it up and building it up. So in a matter of a week or so, I've taken a $100,000 account to over $300,000. Okay, and you'll see that here in a second. But as it was dropping down, all this candle here, I was buying at the beginning of the fair value gap and about the middle of it, and I was trying to get into the lower portions of it, but it didn't quite get down there. So the fair value gap in the shaded area, that's what's being shown here. Take that off for clarity's sake, and we drop in here. I mentioned in the small little vignette, again, I've done 3 videos today that were basically silent. I put a little bit of a music thing on it just to I don't know, I was testing it out. I was really disappointed, didn't play the entire time the video was playing, but whatever. The idea was I was showing you that when we went into the order block, that it was going to rally up. Okay. And it rallied up, and then I took off 10. A small little vignette shows me closing 10 contracts there. And I was looking for it to maybe stage a run up into that 12,553 level that I mentioned on my community post. Okay. But obviously, we were running out of time today. And I messed up on the close of the 20 contracts because I wanted to take off 20 above here, and I tried to put it in as a limit order, but it ended up closing as market. So what I should have done was, and I said this to my private group too, I'm working with TradingView, but I'm used to using actual live platforms. So the things I can do in other places I can't necessarily do here, and because I'm doing it on my phone, I was out doing other things, real life. And this is the reason why you don't want to be trading off of your phone. Okay, but anyway, I ended up closing the 20 here, so I didn't get it above that 12,430 level I was trying to aim for, so I missed it there, and then I closed more here and here. And then finally, late in the day, I had one left, and I just took it off here. Okay, so that's the business there. And I want you to look at how the market created this counter trend idea, but still using my fair value gap principle and concept. Liquidity was above here. The day was bullish. The algorithm kept pricing higher and higher and higher. And the logic was delivered here. So look at where the arrows are for entries. And this was a failure on my part. I didn't get the price I actually wanted. None of these closures were actually above the 12,430 level. That was, I think, the closest one. Yeah, that was the closest one there. So, and I had one left over here, and that was the final bit of business.
Well,
I was leaving it just in case some freaky occurrence where it would take us up in some parabolic run into 12,553, but this wasn't in the cards today. We're not seeing. You can frame what I'm teaching inside of a counter trend model if that's what you are by nature, a contrarian. If you want to be trading with the highest probability and in sync with the early session move, then trade exactly how I've outlined the principles around that 8:30 to 9:30 window. Okay. I'm trying to do my best to give you a little bit of freedom to try to make it your own and inspire you also that these fair value gaps are useful if you know what the bias is. Okay. I know some of you are still posting in the comment section, I'm still struggling with bias. It's only because you haven't worked at it long enough. Okay. You're not going to watch a dozen of my videos and come away, now I know exactly how to do bias. You have to go into the charts and study each day.
Facts. That's been one of my weaknesses, daily bias, because there's so many. Like, how do you know which one to look at? Do you look at them? There's going to be information for both it to go up and it to go down, but the correct tools, the correct relationship between the tools. For example, you need to know what's useless by itself. You need to know what works with something, what extra confluences do, where price and when price can go either way. Be reactive, maybe. I think the daily bias can work with the sessions bias as well. Like if you are not too sure, but then you see the markets swing this way, it could be that it's showing you it's a fake out, it's a Judas swing. So, but yeah, I'm still working on it. I'm still having some issues. What's the word? I'm still having my own session time with it. But like you said, if you're struggling with it, work on it. That's why I want to filter everything by topics. I can then find weakness, work on it.
Backtesting. What is backtesting? Going back and looking at moves like this.
But also, I'm looking at this for the fact that we learned that around 12, where is it? Yeah, around 12 lunchtime, which is in 36 minutes, 35 minutes, is where we should expect to see retracement, because that's where this happened, around 12:10. So because of that, we then are going to expect to see a peak. Price may drop again from the range from lunchtime to thingy. We could even draw. Wait, thingy is, by the way, the open. Is that midnight? I don't think it is. I did not. I think that was. If that's 12. That is 2. Yeah, it's probably midnight. Midnight open is so during London session. Bam bam. So London low to lunchtime high. So basically, from this high to that low, we can expect price to pull back. We're currently not really at any liquidity. What I might do is take some off in the next kind of 20-ish minutes and then set to break even. Because around lunchtime or the afternoon, which would be around about here, it would be, I would have left my house. I would be doing something else. I'll be at prayers at church. So I wouldn't be able to even monitor the trade. With AUD/USD, we're at this liquidity, so taking some off here is completely fine. And then when it's lunchtime, then take some off, leave some to run to this. I'll probably take out 80% of both. This is just not a area of liquidity, which is why I didn't use it as a level to take out anything. But yeah, in the meantime, we can finish this for sure. It's got 9 minutes left. We're done in the next 10 minutes, and then move on. Might even do
Marking
28.
them up on your chart. Now you can do it either using the replay button, watching them paint partially, or you can go back in hindsight and mark up your chart like this. This is all backtesting. All this is me showing you what I actually did. Now, I was going to be facetious and talk about this. For those that didn't really see the videos that I posted today where I actually did the pushing of the button here, the idea of me seeing it before it happens, that's proof of concept and it's proof of understanding. Okay, so I'm the author of this algorithm, so I can operate in it very efficiently. You, as a student of mine, you have to understand my language first. And then you go into the charts and you study with that language, and you'll be able to see repeating phenomena. And because you're able to do this in your own leisure, you collect these examples of hindsight movement with all of your annotations and your points of interest that you studied and see in your observations. Anywhere in a chart where it's empty space, you want to utilize that and have any kind of observation or encouragement to yourself. And you want to tell yourself in those commentaries that you saw this coming. Okay.
And now you're seeing more of why I'm doing what I'm doing in the way I'm doing it. Why I'm not like I will show my face eventually, but I'm not here to show my face. I'm here to study. You know what I'm saying? So there'll be times where I do, get webcam. But the thing about webcam is I have to dress up all the time, which I technically do anyway. But it's just I don't like being on camera. It just makes I have to act a certain way. I'm a bit more conscious of myself and how I look and sound. Whereas when I have the camera off, I'm free. You know what I'm saying? Because there's no one watching me. That's kind of why I don't have the camera on. But what he said there, he called things before they happened, which is why I'm utilizing from May 1st and even in my streams, talking about what I think will happen before it happens, even if I'm wrong. Obviously, the most important one will be the one where you enter the markets. But when I'm talking about DXY, I've literally called this since the morning, and you can go back in the stream to see where I was calling these things. I was calling for price to go down because we filled this fair value gap, taking out this liquidity, and we was in premium above this equilibrium 0.5. So yeah, afterwards bearish. So that's what I've been saying since. I think we're gonna go here. I don't know if it's gonna happen today. I just know the direction, which is what's aided my entries. I'm gonna add the idea of obviously not being lunchtime soon, and we'll add this area of liquidity in AU to take some of the contracts out. But the concept of us reaching here is possible to happen today. And the afternoon session, which I guess from about 1:30 was where we start hunting for more liquidity. We could even come back down deep, take this out before we feel to potentially go up here again. I won't be at the markets, so I'm going to be trading the New York Open session, the New York session open daily instead of focusing on the afternoon session because I'll be busy for the next 66 days in the evening, which is afternoon in New York. So that's why I'm doing what I'm doing, the way I'm doing it. So obviously the most important prediction would be the entry, but you don't get good entries without good feedback. And sometimes like this, we should have predicted, but the mistake I made was I got in. First of all, I wasn't sure if it was bearish or bullish. I knew it was bearish. That is, it was bullish on the DXY. I think it's easiest if I just show you through Telegram. We predicted for DXY to take out this liquidity here, hit this order block, and then rally to this liquidity here, right? That was my target for the day. So I was expecting Judas swings here, right? So that's bearishness on the dollar before bullishness, right? So what's this? This is against the dollar. So I said bearish to bullish, which means we're going to look for bullish to bearish because it's the inverse. We're against the dollar is the second in the pair. So what does that mean? Bullish. This was it. You can see the market open time 8:30 right here. 9:30, kind of when markets start to move. Boom. That's the bullish swing we was looking for. Taking out this liquidity, equal highs. Once we took out this equal highs, came up close to this order block, didn't reach it, but it's fine because guess what? We then displace. Now we don't take out this low down here, but we take out these lows. So if we zoom into the markets, you can see that this displacing leg, you can find areas of interest here, and then you can draw. I didn't notice at the time yesterday, but we'll be looking for entries around here. So this fair value gap, we could have entered here, stop loss above the first candlestick producing the fair value gap right here. Our stop loss would have been here, and then you would have got this trade. And you could have got in here again, because why? It's in that premium. And it's again a fair value gap that we're using as our entry. Bam, bam. And what? We get 2 entries to here, which was an equal low right here. This was the ultimate goal, which is around equilibrium. But here's also sell side liquidity. That would have been our target. So we could have got a 1 to 10 if we entered both of those trades twice. We could have potentially been looking for another one right here, but you wouldn't have got that because the price didn't actually go to that area anyway. But I'm just showing you that came from us predicting that small thing on DXY. Again, for DXY, we predicted, or we're currently predicting because it hasn't fully played out, the price to drop. Since, you can go back in the stream, it's dropping, hasn't got to where we want it to go, and it's not there anywhere near. It's a small movement, but we're still profiting off of this movement. Direction is important. And we go here, we are in those. And we utilized a proper entry model instead of compounding or getting in early, right? We're utilizing the proper model to get in, and we got in. This is the displacing leg that broke structure from the time frame that we are looking for, or the time we're looking for. Retraced back into a fair value gap below the equilibrium, which is the discount in this case for buyers. And then we got in on the retest. Even the price looked like it was going up. We didn't rush. We waited. Bam, got entry here. We had 3 pairs we're looking for. GU was one of them. GU didn't get to our entry because that's the leg. This is the fair value gap and in below the equilibrium, which is that blue line here. And guess what? We didn't get that, so we didn't enter it. But we entered these 2 because they did what we was looking for. And they're also aligning up with DXY. Just like that. So what is he saying? He's saying that because he owns this model, he's very good at predicting what will happen using the model. I'm acting as if I'm him in a sense of I'm predicting what I think markets will do so that I can then know where the mistakes are. Because if my daily bias is consistently wrong, that's my strongest weakness, where I need to put most effort into learning and making sure I understand properly before I even start. Because daily bias is one of the first things you do. Here's my entry. I work on my entry, and that's the key thing. Once your psychology is A1, when your psychology is good, you know it's the model. It's either the model itself is faulty or you're making mistakes within the model. And now you can make mistakes because of emotions, but as long as you know that your psychology is somewhat good, then you can focus on making sure that you're following the rules of the model. So when you make a mistake, you correct it quickly. So sometimes I want to know if I'm wrong, because there's going to be times where I'm going to take losses in the market and I'm following the model because that's a part of the model. And those losses I don't mind. I like to take those losses because it's a part of the win. You can't win your way to success, you lose your way there. So yeah, just a quick monologue because he was speaking about it, about our students and him.
Around the people. One of the things I actually used to overcome agoraphobia, which was the fear of being around other people, because I had extreme anxiety that started obviously from trading, because I built up this large image of myself. And in 2001, all that stuff happened. Okay. And I was afraid of a lot of things. And I had serious anxiety attacks, panic attacks that would come on out of nowhere. The coping skills that I learned to deal with generalized anxiety, I found that were very useful in teaching my students. And it was simply by taking positive self-talk, placing that into your backtesting, where you're note-taking, you're, by all face value of it, you're lying to yourself in these posts in your backtesting. So in your study journal, only you are seeing it. But you're tricking your brain and your subconscious because you're writing it out in your own words. You're studying it, you're looking at it, your subconscious is retaining the image, but it's also retaining what you're saying in it. So when you come back to it at the end of the week or the previous week's backtesting log journals, you read them. And when you read them to yourself, you're reading your own words saying, I saw this setting up where this was likely to drop down here, and I was expecting this turn here because of the fair value gap. I want to see this displacement, and it occurred just like I was expecting. And it comes back down in, and allows me an opportunity to go long. Then I expected the market to move aggressively away from this area and start working towards these short-term highs. And I wanted to take something off above, halfway, high to low. I want to take a premium profit scaling, and that's what that is there. So you're pouring yourself into the chart with your annotations for backtesting, and you're doing it in such a way where you're tricking your subconscious like you expected this to happen. And over time, when you do that, you're recording this subconsciously. You don't realize you're doing it, but by doing these things over and over and over again, it activates your reticular activating system. It's the same thing happens when you buy a car. You go out the next day, and all of a sudden, it seems like everybody else bought the same car. The only difference is you've been more sensitive to that because it's more meaningful to you. So these charts will take on that same characteristic when you make them more meaningful to you. How do you do that? You place your personality and your interest in the chart. So everything here, I'm giving you a narrative here. You would do the same thing, just typing it out, putting it in there, and then screen capturing it and storing it in your journal, or printing it out and putting it in your journal. Those things over time will start building on your subconscious as pseudo memories. So critics that hear me say this, you're like, oh, this fraud telling you to lie to yourself. I'm being honest. You are lying in the chart when you do your annotations for study purposes. You're tricking your brain like you had experience seeing this happen. But because over time you're doing that, your subconscious will retain that. And when you start seeing it live, it will remember, hey, I remember that because I did that before, when you technically really didn't. But then now you have pseudo experience. It sounds strange, like it couldn't possibly work like this, but it does. Our brains are extremely intricate. They're very powerful, but they can be short-circuited a little bit and used
in an advantageous way of studying. And this is one way I teach my students in mentorship. And this is what I'm trying to suggest that you do for your back testing. All you have to do is look at old moves, study them, annotate your chart. As rich as you want that chart to be, that's what you're doing. You're trying to make it as meaningful to you as you possibly can. And over time, you'll create a measure of pseudo experience that will build upon over time. How much time? I don't know. Although you're going to develop at your own pace, and you're going to arrive at full understanding right on time. So it might be a couple weeks for some of you. It may take a year for others. It may take a little bit longer than that. It depends on what you pour yourself into by doing it. And I'll leave that part up for you to decide how much effort you're going to put into it. But I want to share something today and kind of like answer those individuals that like to say that MT4 rented servers were used and stuff. And I don't need that, folks. I mean, it's not necessary. So let's go over here. And you can see there's 100,000. And there's some red in there, folks. See that? 2 back-to-back losing trades. Okay. And that was the business.
Oh,
Okay, that was since the 6th of this month. 100,000.
yo, wait, slow down. Slow
You
down.
can see
Yo, from
there's
100K.
100,000. And there's
Yeah.
some red in there, folks. See that? 2 back-to-back losing trades. Okay. And that was the business. Okay, that was since the 6th of this month. 100,000
Yo.
up to 354,000. Paper trading, obviously.
Oh,
But that's what I was
bruh.
doing on Twitter all those years. I was showing and showing and showing. And this proves concept. It proves that these things work. I'm looking at live data when I'm doing this. This is actually no delay. You can see there's no D up here. There's no little dot showing it. It's as real can be. Okay. If I can't see these things happening before it happens, it will fail. But if I can see them live forming and I have an understanding what the algorithm's going to do, then I should be able to operate like this.
Yeah.
And I saw a comment today on one of the video vignettes I did. And can we get past the drama and the proving who made money? I'm not sure what the poster intended with that because I thought that was what you wanted to see when you came here. Like, why would you come to my channel or anyone else's channel that has anything to do with technical analysis or trading if they can't prove they can do what they say they can do? All I'm doing is sharing my experience and the prowess I have. If I can't do this, I'll fall on my face. I can do it, and I want to be an encouragement to those that are genuinely concerned because they see stupid stuff posted on the internet.
Right.
Folks, listen, I don't know how much of this you need to see before you finally get over it, but I don't mind doing it. Okay, I don't mind doing it. I enjoy doing this. I enjoy sharing it, and I know it's an encouragement to people that had a little bit of doubt. Say, hey, look, did you really use an MT4 rented server on Twitter? Because we don't really see it. We just hear other people talking about it. Well, here's again more proof that listen, this is just a matter of like a week or so. Okay, in 5.5 weeks or 6 weeks, I could easily do what I'm doing here, and it compounds over and over and over again. Okay.
That was a few weeks. He turned 100K to 300,000. Yo. Anyway, we're gonna take some out here. So okay, closing on AU. Taking some profits here. Get a line on that. And then we'll take some out of EU as well. Took up quite a lot. We're off for the day, just like that. So going to screenshot this. Drop my phone. Whoopsie daisy. Screenshot. Wait, no. Let's make it a little bit cleaner. So on EU, I took out, I had 12, 0.12. I took out 0.1. As a fraction, what was that? 5/6. 3/5. No. 48. 8 to 8.3. Just use a calculator. It's 83%. Oh, it actually is. It actually is. Yo, I got it right, nice. Because I got 8.3 recurring, but I was like, because I did 5 divided by 6. 6 goes into 58 times, because of 8 times 6 is 48. And that 2 is remaining, and then you put that over 3. Because you do the 6 to go into the 20, which is the same as 2/3. terms of decimal, because you've times 2 by 10 to get 20 over 6. Then you answer, you divide it by 10 to account for that. So it's basically 2 over 6, which I know, 2 over 3, sorry. Which I know is 2/3, which is 0.3 recurrent. So yeah, 8.3 recurrent partial is 83%. Will price go higher? Most likely. But we'll take it out. Why? Because of lunchtime, we're going to be leaving my house soon. I'm going to be doing other things. I have to end stream in less than 10 minutes, 20 minutes. Because my goodness, I leave an hour and that's so much for me to still do. So wait. Let me see here. What's this thing? So we closed on this one, 5 hours 7. That's 1 over 7 is what? 70 something percent. 70, almost 72, maybe like 71.4. That's my guess. That's very rough, by the way. 71.4. Oh my. Yo. My mathematics is actually improving. Crazy. Was it rounded? Wow, it's actually 71. I got it right. It's crazy. Because I was doing 7 goes into 57 times, so it's 49. And then at 1 over 7, I turned it into 2 over 14. Because once you get something close to 10, it's the same as this, which is approximately equal to 20 over 100, which would have been 70.2. So somewhere between 1 and 2, favoring 1, because 30, which is the same as 10 over 70. The difference between 100 and 70 is 30. The difference between 140 is 40. So it's going to be closer to this, but not by much, because it's only a factor of 10 or 1 if you turn it to this. And then that's 1. You take away from 5, which is halfway in between. You get that. EU. One to three. That goes to two. Which I actually need to set to break even now. 6 6954. Okay, so we've currently doubled our account. In total, we deposited 25. Wait, I would have had money there though. And then, well, we deposited 25, and then we've made. Wait, no, wait. We made a profit of 7. We have about 5 in unrealized profits. But our account started off. No, we deposited 15 and I had a balance of 22. 37. Too sure actually. I'm not even sure. But anyway, we up. Whether I've deposited real life money, we're balancing that double. So we didn't make double, but we are at double. Anyway, back to finishing this off.
Just because I'm doing it with a demo account doesn't mean that you're going to be able to go out there and do it too with a live account. The only thing I'm showing you here is I understand what I'm doing. So I think that's going to be it for tonight, and I will touch base with you, Lord willing, next Tuesday for another lecture, and it'll probably be a little bit longer video then. Okay, until then, enjoy your weekend. Be safe.
Yeah, little did he know. What caused me to kind of notice something is that 300,000 people. We're in episode 28. I'm learning things that's changed why I trade in the past couple of episodes. Even yet. That does look so clean, I'm not gonna lie. And because I'm learning all this stuff in this late episode, 300,000 people have only made it this far. And of that 300,000 people, 95% of traders are leaders, 5% are winners. So let's apply that philosophy here. 270 people are generous. Let's say 90 to 10. 270,000 people here, they are not learning anything. 30 from that 30,000 people, maybe 15,000 people are now consistently profitable. That's in 3 years. He's made 15,000 people profitable. Out of 300,000 people that are watching the video. Oof. Scary. Okay, wait. He's just showing us a trade. So, this is episode 28. Let's see. Live. I don't really have the concept of divergence. Ooh. He's saying that despite lunchtime being up here, at this time, don't wait until you've taken these buys. So this was my trigger for EU as well, because EU's the next buys of the buy liquidities will be up here. So that's why I went for to close EU as well, because whichever one reached liquidity first would have been the where English I would exit on both pairs. So that was my philosophy. But okay, good to know. Oh, buy lunch hour. this. This here. This as well. I haven't traded in the dark background chart in so long. I miss it, man. Lunchtime. I don't know what that means. It's my Garrett them. Hmm. Okay, that's it. That's it. Okay. Episode 29. This is probably one of my best streams. I'm gonna lie. The morning we lost money, made a mistake, corrected it, reassessed, readjusted, entered, made profit. Still have running trades in right now. That's good, man. It's good. It's good. It's good. Doubled one of our accounts. Excuse me. Moving on now to tomorrow. I probably won't revisit this today. Learned quite a lot. Like with these small ones, like they're quite good because I can do it, learn it, extract information, have a break, and go back into the next one. We are now on episode 29. Literally be on 33 by the end of by the afternoon tomorrow. And then by afternoon the next day, which is the Thursday, we could be on episode 38. And then these three I don't think we'll be able to do by the Friday itself, but we might finish on May 10th instead of May 8th, kind of a thing, you know. But we're doing quite well. I'm proud of myself. All right, beautiful. I'm going to do the work now. So 3.5 hour stream plus the 49 minutes earlier. That's almost 4.5 hours. So we did quite a bit of work today, but it's necessary. And we go again tomorrow. Bigger stream, but we did a lot. So I'm going to digest this information when I do my work. And then, yeah, don't worry, I have not forgotten about the business a month. I'm currently contemplating on what I'm going to do for this month. I still haven't, I've got one idea, but I don't really like it. I still might go through with it. We'll see where the Lord leads me. And on that one, I'm going to continue working on what I've already started. Updating the website coming soon. That's actually what I'm going to do now. Update the website, go through some changes as well as work on other business and then what my mum has. So that will be the goal for today. Anyway, it's been your boy CJIC. Thank you for everyone who's watching this back or watching this live. See you guys tomorrow. Peace.